Well, okay. I am ready whenever everyone else is ready.
Right,
Make
sounds
sure
good, Larry.
everybody can hear me okay.
Hey, Larry, we'll maybe get started in about 1 minute. Still got some people logging in. All right, everyone. Well, we'd like to welcome you all to TradingPub.com. We are very excited today to be hosting Larry Gaines of PowerCycleTrading.com. Larry posted a
Okay, well,
link
I'll
in
get
there,
started.
and
Want to
we'll go
thank
ahead and
Morgan and everybody for having me here today at Trading Pub, and always enjoy coming here and doing a presentation. Thank everyone for showing up here, and I'll get started. So first off, this is the disclaimer that we need to put out to make you aware that trading has risk to it, and the CFTC requires all of us to make you aware of that risk. And so what I'm going to go over today is purely for educational purposes only. And that being said, let's move forward. I want you to have this. This is a really great value for you. And the best value of all, it's free, but it's my today's pub special. And it's a course that I've done called Option Trading Made Simple. You can go to my website and buy it if you'd like at $197, but it's free for you guys today only. So I'd suggest if you'd like to have a free course on how to select spreads, whatever, go ahead and sign up. Just put in that URL there, powercycletrading.com/pub2, and it's a freebie for you, and it's a really great course. It's got videos and a course manual, the whole thing. So it'll definitely improve your trading if you do like to trade options, or even if you don't know how to trade options. So basically what it is, it's a course that I put together. It's an approach that takes the simplicity of using option delta for trading options and option spreads to make better trading decisions. I've developed what I call the practical way to trade options, and it really simplifies the approach to trading options. It doesn't make it very confusing. It's very straightforward and easy to pick up on. So please make sure you can take advantage of it. And here's the URL again. So go right there and just sign up, and you'll get the course to you straight away. So that being said, let's move forward. What I'm going to go through today are the progressions of a successful trader, and 4 essential tools that you need, and I'm going to also go through a secret trading tool that we've developed that is available if you guys are interested in it. So first off, we're going to cover how to let winning trades come to you, how to capitalize on powerful trend breakouts, a secret weapon that we've developed and we use that really helps our trading. My favorite trading tools, which are futures, options, and weekly options, and how to get significantly higher returns using less capital. And this is going to be primarily based on weekly options. So I'm going to go over a lot of really good stuff on weekly options, how they're used, some really cool trades I think you'll enjoy and hopefully learn from what I'm going to show you today. So first off, who is my company, PowerCycle Trading? Who am I? Over the past 3 decades, I've been actively trading in the financial security markets. I became the executive vice president of one of the world's largest international oil trading companies. I manage their international billions of dollars worth of oil and foreign exchange and financial market derivatives. I managed this group for over 10 years. We were one of the first trading groups to use over-the-counter options, and we did this on cargoes of foreign crude oil and started doing those back in the 1980s. And I personally traded millions of barrels of these crude oil options. I also later went on to open a over-the-counter option brokerage desk for crude oil with the largest privately owned brokerage company in the world, and I did that back in 2009. So I know quite a bit options and the over-counter markets. So it's a great area, and I love options. So hopefully I can teach you guys a few things here today. But my quest has always been to develop a system that would work regardless of what markets we're doing. And this is what I've put together at PowerCycle Trading. I put together what I learned over my trading career, and I created a 4-step model that anyone can use to improve their trading. And trust me, it costs my members a whole lot less than what I was paid to professionally trade when I was running that. So first off, let's go through how to let winning trades come to you. As a professional trader, I've spent thousands of hours and dollars on trading systems. I've used, reviewed, and developed many different systems, and I discovered there were 5 key elements that really had to be in place regardless of what trading system or methodology that you use for your trading or investing. So first off, have a plan that governs all of your actions. You want to be disciplined in implementing to that plan. And one of the key components is you want to learn to patiently wait for the highest probability trades based on the model you have chosen to use. This is one of the biggest problems with most traders, is just having patience to wait for the proper setup. So you want to wait, you want to allow the trades to come to you instead of chasing trades. That's the other big problem many traders have, is you get antsy, you get frustrated, and you chase trades, and you end up losing usually when you do that. So a really good analogy is to be patient like a cat, a cougar, or a tiger or something in the jungle, waiting for their prey. If you think about it, how still will these creatures like those big cats, they will just lie and wait for minutes, hours, for their prey. And so you need to develop a patience to do the same in order to get your good trade setups once you feel confident in whatever trading model that you're going to use. You also need to create structure in your trading with set goals, rules, time frames, work hours, and risk control. Trading is a business, so treat it as a business and not as your hobby. Now these are all simple guidelines, but sometimes the simplest things are the most difficult to put into action. So I recommend using a trading model or system where the rules are clearly defined, making it easier to implement to those rules. I use a rule-based system that I developed, and it's called the PowerCycle Trading Model. The rules of this system are based around 4 powerful indicators that define a price cycle change, and it does this by identifying a defined price range, price volatility, change in price cycle, change in price cycle momentum, and this provides you a set of guidelines which allows traders or your trades to come to you. So whatever model that you do decide to use, know the guidelines and rules and make sure you stick to them and use them. Be disciplined about it. So for all swing trades and day trades, I will always use multiple time frames, 2 to 4 different time frames. Now this allows me a trade confirming process which allows for non-emotional trading. So I want to try to make my trading as mechanical and non-emotional as I can. So if I follow my rules, which is very definitive rule-based system, then it allows me to take that emotion out of my trading. The results of using these elements in your trading is that you make decisions based on your model you're using, not your emotions of fear, greed, that often can sabotage traders, leading you to either overtrade or give back those profits. It happens to us all. It happens to me. So I'm constantly having to control my emotions, control my impatience as a trader. As a trader, as a capitalist person, we're making money. We're sitting at our trading desks each and every day, watching the markets move up and down. You get restless and you feel like you need to be in there doing something, making money. It's kind of like in your DNA. So what you really need to do is, define your system that you're using and then be patient, wait for those trades to set up. So these are some trades that set up for us yesterday. We have a virtual trading room. The room opens up every morning at 8 Central, and I do a kind of global markets. And then the markets, open at 8:30. When we see a good trade setup based on our trading model, I'll call out the trade saying that, here's a trade setup to go long on gold or crude, and I'm looking at doing it, and then this is where I get in, this is where I get out, and so on. So what I'm going to show you are just the trades that I called out yesterday. They're unaudited, and again, no guarantee of future performance on any of this. It's just educational. So yesterday, we've been trading a lot of gold. I like to trade wherever the market's moving, and we traded pretty much gold yesterday. We had some really great trade setups, and these are just the ones that I took and called out. But you can see $100, $150, $200 per contract, so a cumulative $560, and that was trading the first hour and a half of the day, and that's on gold, 7.97%. Now, we were trading a lot of weekly options on Apple, when Apple was really moving. And so, we're going to switch around. We'll go where the action is. But lately, we've been really, trading gold. I had one member yesterday. He made over 5,000 cumulative per contract on gold, and he trades more than one contract. So you can figure that out. He'll trade 2 to 3 to 4 contracts. So in one day, he made over $5,000, and that was just on gold. He also made $500 as well, and that's all using the same system that I developed for all of our trading. Now, what I'm showing you here, these are a few of the trade signals. Now, this is not the system. I can't show you all the details because it is proprietary, but it is available at PowerCycle Trading, and you can buy the course and the system. It tells you how to use it, how to set up the indicators. There's no software involved. So you can just do it on any platform that you care to use, Ninja, Thinkorswim, TradeStation, Metastock, whatever. It works. We show you in the course the model, the indicators, how to set them up, the trade selections. We also have an automated part of this that we've automated for Thinkorswim, so you can also get that as an add-on package, and it's totally automated, and it's very cool. And so this is part of that system there. Not aware, Thinkorswim is a free platform. So if you are interested in some really great platform for trading options or just for their platform itself, which we have our customized indicators for, plus a scanner that we've developed, you can go to TD Ameritrade and open an account within 15, 20 minutes. And get download the platform and get it for free. So it's pretty cool. So anyway, this is what we call momentum or compression breakout trades, and these are a few of the trades yesterday. You can see this is when price compresses, like right here, compresses, consolidates sideways, and then we get what we call a compression squeeze breakout, and you can see how explosive it is to the upside or downside. So we're constantly with our system looking and identifying these type of trade setups. And for example, this is gold futures, and you can see here it broke out at 1238, and it went up to 1241 within, let's see, this broke out at 901. By 903 it was up here to 41. So in about 2 minutes, that's $200 a contract. So these things are explosive, they're fast, they're exciting trades. And I thought I'd show you a few more of these. So these are all what we call compression breakout or breakdown trades. Here's one here where it broke to the downside, and that came in at about 1239 and went down to 1236. That's $300 a contract, and that's a really fast move. Here's another break to the upside. Here it broke out at 1241 or 1242. Went up to 1244. That's $200 a contract, and this is all in 1 minute. Here's another really powerful one here. See how tight that got on the volatility, the compression, consolidation of price, and then it breaks to the upside. So with our trading model, you can identify and spot these, and then we teach you how to trade them using OCO orders. A lot of times that's what we use. One cancels the other. So we teach that in the trading room. So that was a very explosive move on gold. And here are another couple. Here's another one that came in about 1130, broke from 1257 up to 1258, $100 within a minute, and here's a really big consolidation compression breakdown. So these are a few. We also, with our model trade cycle, what we call cycle low trades and highs. So when you get up to the top of a cycle, we'll have a signal to go short, and when you get to the bottom, have a signal to go long. So we incorporate cycle highs, lows, and these compression breakout type trades in the trading that we do both on day trades and on swing trades. This is a scalping technique here, and I like it because see how fast the movement is? You don't have to be in the trade very long. And personally, I'm a fairly conservative trader, so I don't like to sit in a trade waiting like here. Let's say you got in here and you have to sit. I get kind of a little bit antsy thinking, well, it might break to the upside or downside, and then you get it wrong and boom. So I like, these are great because once you get the direction, there's usually a great follow through. So then the other part of this is how to capitalize on these breakouts. And one big component, which I'll go through here shortly, is something that you can take and start using tomorrow. Just practice it a little bit today, and tomorrow I think it'll help you on your trading out the gate. So it's what we do is incorporate trend lines to identify these breakouts. So you probably all have used trend lines, but basically it's just supply demand dictate price movement and the use of trend lines. And trend lines are universally used, but the construction can be very dissimilar from one person to the next, causing a very subjective interpretation of how to draw the trend line. So I use a rule-based trend line setup based on pivot points, which makes drawing them mechanical and systematic. Now I learned this, this technique, I learned this over 25 years ago from one of the greatest probably technical traders out there, Tom DeMark, if you're familiar with him. He used to actually do consulting work for the company the trading group that I ran, and he came to our office quite a bit, and learned a few of those techniques from his books and just from him, so it was fantastic. But this is one of them that I've been using for a long time. So basically, the simplicity of it is that if you do it this way, it's going to make things very mechanical for you, and then you can even program this into your system, which we've done with our Thinkorswim platform. So basically what it starts off with is what we call that supply pivot point, and this is when there is a price high that is not exceeded by the prior price or price immediately after, and this is what is referred to as a pivot high. So here's an example. So what you want to do when you're drawing trend lines, you always want to go from most current price. Current price is more valuable than historic price. We're more interested in what's going to happen next, really, than what happened in the past. So if you think about it intuitively, logically, you should be more concerned with current price and then move to the left of the chart for past price. So start at the right of the chart and go in to find the most current pivot point, and then go up to find the next pivot point. So the old customary way to do it was left of the chart, but the real way that you need to do it, and this makes it mechanical, is from right of the chart. So for example, here, I'll just get the old drawing pin out. So go from right of the chart in, find your first pivot high. We're going to develop a supply trend line, and here it is. See that pivot point? It's higher than the bar before, higher than the bar after, the top. So the high is higher than before, after. Once you find that first pivot point, pivot 1, then go to the left of your chart out to find the next pivot. And there it is. It's higher than that point, higher than that point. Connect the two dots, draw your trend line down, and you have a perfectly mechanically drawn supply trend line. And you can do this and automate it, which we've done, and then you can have this computer do it for you. Now here's one of our trading signals based on our cycle low, and then here's a trend line break to the upside. Look at the powerful momentum. So I would also recommend that when you get a trend line break, you give it some room and you let it break, say, the next high, so that when it first breaks through here, let it do its thing. Usually it'll pull back a little bit. Sometimes it'll blast straight through, and then buy on the next bar break up. Because a lot of times you'll get a little jerk back, and then it'll take off on you. So that's on a 5-minute, and you can do this on any time frame. Here's another example. Now this is an example with our automated trend lines using our thinkorswim platform, and this is where our program that we have an add-on application to our system model that you can buy, and it does all this for you. So here's your pivot, here's that pivot point high, here's pivot point high, and then we've automated this trend line drawn in there for us. Here's our signal, our buy signal from a cycle low, trend line break. So you want to try to, give it some room, let it break. Don't, you can't add on. You could buy here, then add on the break to the upside. There are various different ways to use it. Now this isn't all we use. This is incorporated in our system, but this is just one part of it. But it's one part that's can be very, very valuable to you identifying and getting into some really great momentum type trades. So the next one, here's just another example. This is on a weekly, so any time frame. Here's your pivot high here, pivot high, automated trend line, boom. Here's on a 400 tick, for intraday trades. Here's a pivot high, trend line, breakout. Now the opposite is what we call just the demand pivot point, and it's the demand pivot point is where there's a lower price that is lower than the prior price and the price immediately after. And that's called the demand pivot point. So here's an example of that. So here's that pivot low right here. So again, right of the chart, come in, come down. Here's your pivot low, lower than the bar before, bar after. Come down, find that next one. Here's the next one. Extend the line up. Perfectly drawn demand line, break, give it some a little bit of room, down she goes. And here's one automated using our our add-on program that we have. And here again is pivot low, extension, breakdown. And then we also, from these pivot lows, we also add what we call these pivot low extensions, and these are great support resistance levels to trade off of. So a lot of times when our system is giving us a sell signal, I'll wait till it breaks this support level, these extension lows, and a lot of times, really high probability, most of the time you get some really good fall through on the breaks. Here's another example, Baidu on a daily. Here's your pivot low, See the point here is lower than the bar before and after. Then come down, find the next one, and there it goes. So now what we're going to do is, practice that. When you get a chance, look for those pivot lows, pivot highs, and then connect your dots. And it'll make your trend lines mechanical, and you can draw them then each and every in the same every time. So the next thing I'm going to go through is what we use. This is our scanner, and this is a great tool that we've put together, developed for scanning the markets to find various type of trades based on our trading model. So what this is we've incorporated our trading rules into the scanner, and then again, this is on thinkorswim, and then with the platform, the thinkorswim for everything. I mean, you can get every NASDAQ 100 stock, every futures, Forex, you name it. And then the way we have our scanner set up, I'll show you the matrix. Here's a better picture of our matrix. We can split it by time from 1 minute. I've got 5 minutes here, but we can break it down on time intervals of 1 minute up to 1 month. And then based on our trading model, the rules that are coded into this scanner, we can look for what we call those compression volatility breakout trades. We can look for cycle low, cycle high trades, and we can do it fast by just scanning through a universe of whatever we want to look at. So here's a watch list that I put together. Here's crude futures, S&P futures, gold, NASDAQ, Russell, Apple, on down. And then we've got it color-coded, and we've got it numerically gauged from a strength of 1 to 5, 5 being the strongest. And then the color code tells you if it's in a volatility compression squeeze, And if it's got a negative in front of it, that gives you the probability of the break of that squeeze to the downside or upside. So it's a really cool tool that we use, and it really helps us to find either, actually day trades, and I use it a lot for looking for swing trades. So here's an example of a volatility squeeze that was found on the scanner for a 5-minute squeeze, and here's the trend line breakout. Boom. Here's another squeeze, compression squeeze again. Here's Apple on a 60-minute time frame. See the price consolidation here? See how tight that gets? And with our app that we've developed, we can spot when it starts, the squeeze starts, and when it ends, and then we can, be ready to jump into the trade, either using, the outright underlying or even options, which a lot of times on the swing trades, pretty much 100% I will use options, which I'll go into a little bit later. So here's a trend line break, volatility compression squeeze to the upside on the 60. Here's another example of crude oil futures squeeze, and this is on a daily. Look at the power of that squeeze breakout to the upside. It started here on like the 12th of November, ends here on the 17th. So these can last quite a while, but you can get ready, you can get your strategies together. Then, with our model, it'll tell us, directionally which way it's going to go, and we go from there. So next I want to go through, some of the trading tools that we use. I mean, for our day trading, we're going to use pretty much futures during the day, and that's what you saw earlier. You saw the futures trades that I did on gold. And then for, some day trades, though, we will do weeklies. Used to do a lot of weekly options, again, on Apple when it was really trending. And then I also will always, generally 99% of the time, do weeklies when I do what we call expiration trades that happen on Fridays. And also on my swing trades, I try to incorporate weeklies. So let's go through the benefits of using weeklies. I got a question here I'll get back to. Question, I don't understand how you pick the correct pivot point. Okay, I can back up real quick just to show you, because this is, if you take away anything, this is something it's a very simplistic thing, but it's something that will really help your trading. So let me go back to the example. So let me get a really clear-cut one. Okay, can you see, everybody see that okay? Here's a really clear example. If you come from the right of the chart here, see my little pointer? See these points, see that high there? Well, we don't have a bar after it, but it's higher than the bar before. See that bar there? It's higher than the bar before, but not the bar after. So we come on down, see that bar there? It's higher than the bar before, but not the bar after. Same there, same there. Now here, look at the difference. Now this bar here is higher than the bar before, that bar there. It's kind of, can't see it, this yellow kind of blocks it out, but let's say that right there, that bar high is right there, that bar high is down here. So that point there is higher than the bar before, higher than the bar after, so you select that point. Now you go looking for the next one over and above it, and we have this automated, we count the number of bars between it, but here would be a pivot high, right here actually. See that pivot point? See that higher than the bar before, higher than the bar after? So you could draw your trend line right there, and that's fine. You can see what happens. So here is your pivot point there. Here's that pivot point. Now with our computer, we have it, like I said, we count X number of bars, so that's how it's programmed. But then after that point, here's your next pivot high there, pivot high, pivot high. So see that? So there you go. So does that make it more clear for you? Okay, and then the scanner tool, I'll go over that again too, question on the scanner tool. So what we've done with the scanner tool, we've taken our trading system it's rule-based. We've programmed those rules into Thinkorswim. They have what they call their scanner watch lists, and we put our rules inside the scan product that they have, and then this is proprietary to us only, but you can buy the scanner and then we upload it to you, but you have to have a Thinkorswim platform, and then we can break it down on 1 minute to a month, and then we can look, see, here's a squeeze, that -4, that's a real strong squeeze. Volatility compression on a monthly, here's a volatility compression on a daily, and it's in green. That identifies, it's color coded. If it's not green, then it's just, it's not a volatility squeeze. We have a certain rule that we use to define what is a volatility squeeze. That's part of our program, and that's all it is. And then what you can do is you can link your charts to this scanner. So for example, I could click on TF and I'll pull up the TF charts, and then I can drill down into it to see exactly what it's looking for. So this kind of tool can save you hours and hours and hours of combing through charts. So it's a great tool to help you spot your trades. So weekly options. Now this is something I like to use for all my swing trades. And if I can find something for a day trade or expiration trade, I like to use weeklies for that as well. And so I'll go through the reasons why. Money back guarantees on our scanner. I mean, we just it's just money back guarantees. If you don't like something, we don't have it. It's our proprietary model for one thing, but you don't have to buy it. So usually the way it works is when you join our trading room, you get the trading course that we've developed if you want, and you come in the trading room and you see us trade, and you'll see us using the indicators, and then you'll see us using the scanner live inside the trading room. And when you see it working there, you know it works, and I'd say 90% of the people that are in our trading room end up buying the customized package plus the scanner. So that's usually the way it works out. So weekly options, they're just now it's growing very fast on weeklies, but they make up over 12% of the 300 plus options now. They're still relatively new, but they're a great tool to use for trading, really the high big beta type stocks like Apple, Google, Amazon, and those particular stocks now make up over 40% of the option volumes traded. They come out every Thursday and expire 8 days later. 8 days later from Friday. And in 2012, the weekly options were expanded to 5 straight weeks for groups of stocks and ETFs with large option activities such as Apple, some of the ETFs as well. So what makes them so great to use is that they're cheap. Since expiration is within days, weeks, or even hours, you can purchase at the money weeklies or in the money for as little as $2 to $10 per contract. They have unlimited profit potential. They can move 500 to 1,000% or more in a day, in a few minutes actually. They're easily traded. They have lots of volume. They're liquid. And being weekly options, they bring in 52 times a year more opportunities to have different option trading strategies that you can use versus a monthly option. So they're not just for the pros. I mean, anybody can use them if you understand how to trade options, which is something that one of my specialties is teaching options. Options kind of have gotten a bad rep over the years because a lot of people think that they're too complicated, and they hear the option Greeks and they think that it's going to be too difficult to learn, so they don't give it a try. But I've developed a way to teach that earlier I said was what I call the practical way of trading options. And what we try to do with this approach is to focus more on the option delta, and then we use market timing. In my opinion, market timing is like the one of the most key important elements in your trading is to be able to time the market. So we've got, an option trading delta course. We've got our timing system, so we have a great system to use, so we can address both of them. The options, we can find the delta of the option and teach you how to find the strikes that you need. So it's a great tool, and then a timing system is a great tool to go with it. So by using weeklies, we will use the weeklies as a derivative to the underlying option, or underlying stock or futures. So if we see a good directional system move based on our system, I will look at weeklies first to see if there's some kind of trade opportunity I can use weeklies for. Now, the reason I like to use weeklies, and that's what we'll go through next, is that they can give you greater return using less capital. So you can really define your risk, and you can really keep your capital costs low. And that's the thing I love about using weeklies, because I'm a pretty conservative trader, and I can really define my risk with options. But a lot of times, if you have traded options, sometimes you think, well, the cost is still pretty extreme. But if you know how to use weeklies, you can really get your costs down. So primarily the benefit then boils down to what I call leverage at an extremely low cost. So let's go through the mechanics of leverage through options, just so you can have an idea how they work. Yeah, I use TradeStation option platform. I use TradeStation. That's a question. That's the platform I use as well. I have my Thinkorswim platform, my TradeStation platform, so I use them both. My execution, my trading is actually through TradeStation. That's where I have my accounts. But the Thinkorswim platform, I use that. It's great for option analysis and just the platform in general. So the basics of an option, you need to understand how option prices are determined. And what determines the price of an option is just time value times the implied volatility times the extrinsic value. So those three components together create what we call the option premium that you pay for an option. And by using weeklies for day trading and swing trading, we've been able to better utilize the beneficial factors of time decay, volatility, and option delta, creating what we call a forceful triple win trading formula. Then, combining our directional price cycle system, then we can really get some great trades on. So the first thing that you need to understand is just time decay and how that affects the option price and how you can use that to benefit your trading. So when you have an option, weekly option, they come out each Thursday and they expire 8 days later. So you can see the exponential fall off of the time from 100% time to 0 in 8 days. So this is basically every day it's depreciating by 1/8 of a value, or 12%. Here's another table to illustrate that. So here on Thursday, you've got time value at 1. I put these numbers in, implied volatility at 300. Intrinsic, I left at a constant of 1. So you multiply these together to create your option price. And you can see on Thursday, when you had 100% time in there, times that 300% volatility, times intrinsic, your premium came out to 300. Now you can see each day as that time decay goes down by 1/8, and you multiply that through, you can see that your premiums aren't really jumping that much. They're actually decaying, and they eventually go to 0. So even when you have a volatility strike, like on this Monday example, it was down to half, your implied volatility shot up to 800, from 300 to 500 to 800, and you still hardly had any jump in premium. It only went to 400. So that pretty much is created by time value and the decay of the time value. Now here's another great example to illustrate this based on option chain. And here's an option chain of Apple. And this was back when old Apple was trading about $633. So the top chain here is a weekly. The bottom chain here is a monthly, all for Apple. And you can see here, I'll just take the 640 strike right here. That's at about a 58 delta, which means that's very close to the money. 631, 640, 635. You can see the delta 67, 58. So I just take this as an example. You can see it's at 5 at 505. So remember, one option contract represents 100 shares of stock. So this would cost you $500. Let's say if you could buy it right there. So you can control the strike, the 640 strike of Apple for $500. Now here's the the monthly below it. Same strike, 640. Delta's about the same, but it's twice as much, 1050, which is 1050. So twice as much as the weekly. So that is basically time value. Here's one more example, just kind of give you a little bit different look at it. Again, here's Apple, and Apple's trading at 640 a share. So to make one option contract equivalent equals 100 shares. So we're going to make, if you're trading Apple, you buy 100 shares of Apple, it would cost you $6. If you made $1 a share, that would be $100. So your cost is, you make $100, and your cost is 64, so that's a 0.16% return. Now, if you use the weekly option, 5 days to expiration, we have that option delta around 50. 640 call was $500 right here. Here's that same dollar you make, $100. It's 20%. So 100 divided by your cost here is only 500. Plus, you only have at risk $500 versus 64,000. Which one would you prefer? To risk 500 or 64,000? Here's the monthly. Same 640 strike, same delta 50 that we showed you in the option chain. You make $1 or 100, so that's 9.52. So you can see the power of the leverage and the risk that's reduced when you use weeklies, but you need to know how to use them. And it's not, that difficult when you go through the kind of the step-by-step progressions of how to do it. So I'm going to show you just a few examples that'll hopefully, shine some light on the way that you can use these weeklies. And some of my favorite trading strategies to use them for is momentum breakout trades, directional Friday expiration trades, retracement trades, and reversal trades. So I'll go through a couple here. Here's a weekly vertical call spread that I did. This is on GLD, and this was entered into yesterday, got out today. And this is going to go, I'll just take you through the trade setup and, kind of why I looked at doing the trade. Here's gold. We trade a lot of gold futures. Here's gold futures on our trading model. Well, this is, not our, I don't have the whole model in here, but this was our one-step rule. I've got a trading system put together strictly for swing trading, and it's a rule-based system which incorporates our trading model, and it's kind of a trading methodology I've put together with certain set rules that you follow step by step, and that's also available too if you're interested in swing trading. I've got a swing trading course that also incorporates the trading model. Plus, I just did a boot camp a week ago on swing trading. That's also available if you'd like to see that. It's on my website. So if you look here, this was gold had that huge sell-off, and then, it was oversold basically, and our system was showing one-step rule that we had met. We call it Rule 1, and it's based on the daily time frame, and certain parameters were met there. So then the next rule was met based on the 60-minute time frame, and this was on the 28th of June, which was last Friday. So actually the system that we use actually went long gold based on the 60-minute time frame on Friday, and I waited till Monday to get in, and I got in right here on the break of this trend line. See the pivot high there, and the pivot high, nice trend break. My system was long. I took the long. And instead of just going long gold futures, which we also, I used GLD, which is the ETF. And it's a really great ETF because the cost, it's got really tight spreads, good liquidity. And it's not something I do all the time. I'm very, very selective with my swing trades. But I thought that actually I thought gold would have a little bit more movement than it did today. It came back off. So yesterday I got into the trade, and it spiked so fast. I got out of half of it within an hour later, and then the rest of it I got out today right there. So I used my trading model to get me in, to get me out, and the other great thing about options is that you can do a spread and you can leg out of the spread. And I use my trading system, to do that, which really helps. So here's a GLD trade exit. Let's see here. There's another volatility squeeze breakdown there. So here was the trade setup right here. So on the first, I bought the 120, 123 call spread to open. Ended up paying $1.32, which is $132 per contract. So it's a low capital cost. That's as most I could lose on the trade. And I won't risk that whole capital. If it goes against me 60%, 50 to 60%, I'll just close the trade out. So let's say it went down to 40 or 50 bucks, I'd probably just exit the trade and lose, $50, $60. But it spiked up here, so I got out of half the trade there, and I made $36 a contract. And that's a 27% return in an hour. So you made 36 cents or $36. My cost was $132, 27% return. So then I want to keep the rest of the trade on. I was, looking for gold to really, explode higher, which it did not do. And when it started rolling over today, I took the rest off, and I made, $18 on the balance, or 14%. So, this is one trade, but it was a nice defined low-risk trade using weekly options, and that created a really low-cost capital type trade that I could set up. Here's a trade that I currently still have on, and this is just for SPY, vertical put spread. And again, this is based on my trading system, and this is on the weekly time frame. The weekly time frame, I call the long-term time frame. Our trading model actually went to a negative downtrend back on June the 10th, this weekly bar here. And then you can see the following week we had an outside week and it closed down. So that's a very bearish pattern right there. So I wanted to look at, a rebound, any rebound into the 50 moving average right here. 50 moving average is one of the key moving averages that I follow for all my trading. So it's a simple moving average that I use. So when SPY came back up here into this 50 moving average, I wanted to do a low risk defined trade to go short. Instead of using S&P futures, I'll always use the S&P futures as kind of my guide for my underlying, but then I'll switch over for the options and I'll use the ETF. So here's the SPY, and again, here's your 50 moving average. So I could put on and I did that by just doing the 161. I bought the 161 puts right in here, and I sold against it the 159 puts below. So created basically a $2 spread, which is $200. My cost on that turned out $60. So that's the most I can lose. That's my capital at risk, but I won't lose 60. I'd probably cut that if I got down to 20. And the most I can make, it's a $200 spread, so you just take 200 less my cost. So potentially I can make $140 a contract if at expiration on Friday, SPY is below 159. And if it's not, I'll still probably, if it's between 161 and 159, there will still be something to be made. Now, if it closes over 161 and I still have the spread on, I lose 60, but I potentially can make 140, and my capital cost is 60, so that's a 233% return. So if you have a system that you feel confident in for direction, then I really like using weekly options for spreads. Here's another trade that I did. This is what I call progressions of a Google swing trade. What I like to do is follow certain stocks, and I'll follow Google, Apple, and a few others. And then when they start moving, I'll do a number of different trades on them using weekly options. So I'll go through these pretty fast. This was back Google. Here's a 4-hour chart. So my first trade came back on the 15th of May, and it was a short based on my system. And I did a put spread, came down, covered right here, went back up. I did another put spread here, trade 2, came down here, covered. See that nice breakdown. Came back up here, did another put spread. So it's just, you can see it trending down. And then here, my model went long right here, and I did a long swing trade. So kind of a summary. And I like to do, I will also take advantage of the time decay, and sometimes I'll do what are called ladder spreads, where you sell more than, if you're doing a vertical spread, you'll sell another strike above or below. So this was a bear vertical ladder put spread, entered on the 15th, exit on the 17th, and basically was long the 905 puts, short the 900 puts. And then also I was pretty aggressive. I shorted to the upside the 925 calls and the 935 calls. And you can see I collected $125 there, collected $25 there. So my net cost basically was $40. I had more risk, but I got my cost down to 40. I had plenty of margin to do it with. And so the way the trade turned out, bought back, I sold off the put that I was long, and I broke even on that because it didn't go, it kind of went sideways. I bought back the put I was short, made $260 on that. The short calls expired worthless, so ended up making $410 per contract, and that was on this trade here. So next trade, I keep trading it. So here's another put spread, 900 put. Here's a long, short that. So that spread was a $370 cost. It was a $10 wide spread, or $1,000. So on this one, I ended up making $290 a contract, which was a 78% return. Trade 3 was another short trade, another put ladder spread. This one was basically a break even. Trade 4, here's that spread to show you that. I think this recorded, so you can go back through all these trades. And then here was another short Google trade, and then the last one was a swing trade long bull call spread, which ended up making $230. So using my trading system for cycles and weekly options, you can generate some really low risk defined trades. Now I'm going to show you one other last trade that's a really cool trade. It's a little bit different here, but cumulative, this all adds up just to kind of go through. So the first trade made $410, second trade $290, third trade basically break even, fourth trade $220, $230. So the cumulative of all these was $1,152 per contract, and defined risk trades all the way down. So this is a really cool trade. This is called a back ratio call spread, or a back ratio spread. And I like these trades when you have a really cycle low or cycle high with potential for a major momentum break up or down. These particular type trading strategy, this particular strategy has unlimited profit potential. And basically this is on Apple. You can see Apple. This was Friday on Apple. Our system went long actually based on the 5-minute. This is kind of how I set up a trade. We had a squeeze, broke to the upside. Here's the 60-minute time frame. So I looked from 5-minute, 60-minute on up to daily. Had a signal long here, trend line break. You can see goes sideways and then takes off to the upside. And here's just looking at a daily. You've got like a double bottom close to it. So analyzing this, it looked like a good potential trade for a pop to the upside, a good pop to the upside. So you need, this is the kind of movement you want for these ratio spreads. So here's the trade. So what you do is you buy. This was a call spread, so I'm going long. So on this particular trade, it was you buy bought 2 of the 400 calls, sold 1 of the 395 call below, and that finances it. If you can see this slide here, you can see the cost. It actually costs $1.59 by doing it that way. Now here's a summary of what it looks like. So here's on the 28th, the profit potential is infinite. The max loss is 657 because I don't have time to go into the detail, but your exposure is the width of the spread, so it's $500 plus the debit cost or minus the credit. So this is another trade strategy that I teach in my option course. So the basic cost though is 157. So what you want this thing to do is you want it to close either below 395 or above 400, and you'll still, even if it closes below your maximum, you're going to still only lose 157, or you might even make money the way that the leverage works for you. But your profit potential is infinite. So here's what it looked like today. I just ran a mark-to-market on it. So today you can see the cost when that was put on Friday was 157. Today it's at 1425. So 157, your cost is 1425. So right now return on capital, that's over 800%. Return on at risk, 193%. So it's a pretty cool trade. It's a good way to, leverage, but also control your risk. You know what your risk is, and it's unlimited profit potential to the upside. So that's pretty much it. One last thing here, just to illustrate again the leverage of these weeklies. This is on a lot. This is what I call the lotto day trade. Now these things are very, very hard to find, but this is what can happen. This was back a year ago, and this was on Netflix. And this was just the trade setup here. Netflix was at 107, and it went up to 124. This was on a Friday expiration, so you could have bought the stock shares at 107, and then it pops to 111. But instead of doing that, bought the 110 calls. They were going at $11 a contract. Ended up selling those things off at 127. So can do the math on that. So your net profit was $116 a contract. Your cost was 11. That's over 1,000% return. So, people throw out 1,000% return. You think it's a bunch of BS. Well, that shows you how it can happen. And here's the actual chart of that. Here's a 10-minute chart. Here's the stock was at about 108. Here's the actual 110 calls. They were trading down 11 cents or $11, and you can see that spike there. So that's pretty much it. I just hope this helps you out on your trading. If you'd like to learn more about how we trade, please come join me at Power Cycle Trading. But in summary, weeklies, they will give you the ability to make money with lower risk, low capital requirement, shortened time frame, higher profits, higher return on capital, and many more trading opportunities. So here's just one note back from one of my members a couple weeks ago. But this guy has turned into a great trader. Since being in my trading room, my service, he's been in there for over 6 months, and he's on average now making a 5% return per day on his portfolio. And this is on just his day trades. And he just day trades gold and crude primarily. So that was his goal. He always wanted to, he tried to do it, never could. Now he's averaging 5% per day. So if you'd like to get started with us, though, here's that free special I'm having on my option trading made simple. It's $197 on my website. And if you'd like to get it for free here today, please take advantage of it. I'd love to have you have it. And go to that URL, and it's powercycletrading.com/pub2, and it's all yours. And it's a really good little course. This is some of the things that you get with it. It teaches you the videos, what is an option delta, how to use it, how to use option delta, examples, how to use option deltas for your option spreads. So it's a great course for teaching you how to select option strikes for both single options and option spreads. So any questions here? I've got a few minutes left. Okay, let me see if I can get this one. This is a good one here. Since weekly options or even day trade for options is a daily 4-hour, 5-minute candle charts help for spotting entries, exit points for the option trades. I guess what I mean is that if we should use the strategies for candle charts such as shooting stars, yeah, you can do that. Yeah, candles work great for finding your, potential lows and highs, and then you incorporate, instead of the underlying, look at using the weekly options. Now, one thing you need to be aware of, though, depends on what you are trading, because some underlying stocks or ETFs will have more liquidity and volume, and they'll have a tighter spread than others. So that's why I got so accustomed to using Apple, was because the spread was about $5 to $10 at the most. So if you get like some of these options, like Priceline or some of these other ones that are really highly priced, but they're not as liquid, you'll get the spreads are so wide that you'll end up, even if you get the direction right, sometimes you'll lose money because you get hosed going in and out of the trade based on the wide spread. So that's something that you need to be aware of. So you put together a watch list of things you like to trade, and then find out ahead of time, what the spreads are, doing. So you know, after you trade for a while, you know certain ETFs or stocks, and you know how they trade, you know their spreads on those things. So what happens if the right strategy used for weekly options, but there's no place in the market to fill and execute the option chart? Well, that's just that problem right there. So you need to trade the ones that have liquidity, and there are plenty of them that do. So that's a little bit of homework for you. But if you'd like to join our group, I do a lot of that for you. Do I send out alerts? I have what I call the daily aftermarket outlook. If I do a swing trade, I will touch on it in my outlook, and I also in my trading room. When I look at a swing trade, I see something setting up, I tell it to the room. So you can get it that way, or in my daily aftermarket outlook. Yes, I have a trading room. It opens up at 8 Central, and it closes at 3 Central, and I'm in there from 8 till about 10, and then it's, I'll pop in and out from time to time, but I'm teaching and showing trade setups when I'm in there, and then we've got some great traders that are in there all day, so you can have good interaction with other traders in the room. And the Thinkorswim is a great platform. If you can't get it in the UK, I use TradeStation, and it's excellent. Ninja, but Ninja doesn't have options. But like I said, I use TradeStation. We're about 70% on our winning trades, and a lot of times even more. My swing trades are, really high percentage winners because I'm very, very selective with those. So come check us out. My prices are good. I keep, I'm a small company, so I can keep my prices down. And profit factor, well, my system is not a black box system, so I'm not tracking it as such. But you're welcome to come check it out and see if you like it. I think it's probably one of the better systems out there that I've seen. Like I said, I've been doing this for over 30 years, so I like it. So good luck trading tomorrow, and everybody have a wonderful extra long weekend holiday. So thanks again, and take a look at my site, and happy 4th. Good luck trading tomorrow. Ciao.
All right. Thank you so much, Larry. I hope all of you will take advantage of this program he's offering you guys for free. If you haven't written down the address there, go ahead and get it. We'll be shutting down the room in about 5 minutes. Just want to say thanks again to Larry for coming out, and hopefully you guys will take advantage of his offer. I suggest all of you do so.
and we will be getting a recording of the presentations that were done today. We'll be getting out. We'll have a link, and be sending that out tomorrow. So thank you guys all for coming in today. I hope you learned a lot. I hope you will be sure to implement what you've learned today in your trading, and I hope everyone has a lot more success already. So one more time, if I'll put in the web address to Larry Gaines's site, and again, I hope all of you guys will take advantage. Thanks again, and we'll see you next time here on the Trading Pub. Take care, everyone.